After an out-of-this-world year in 2021 for investments in space companies, economic headwinds have cast a shadow over the second quarter of this year. Deal count and investment dipped 35% and 38% respectively when compared to the prior quarter. So for what lies ahead for the future of space? We've got the perfect guest, capital managing partner Chad Anderson, who we should mention is also an investor in SpaceX too. So let's talk about the broader slowdown that we're seeing right now. I mean, it sort of feels like what we're seeing in the tech space. You know, all these private companies, the startups who got so much funding over the last few years, starting to see a real freeze.
Yep. I mean, most of the action in the space economy right now is in the private markets. The public markets certainly affect the private markets. It starts with the late stage and then it moves its way to the early stage. And you know, what we're seeing is some economic headwinds, and I'm sure that this macro market is going to continue to affect some of these space companies, particularly those that are capital intensive with long timelines to revenue. But overall, we don't see that the space economy is at any existential risk. And in fact, you know, most of the companies that we're investing in and that are in the space economy are counter-cyclical and resilient to macro market conditions.
Yeah, and what's interesting is I guess the pool of investable projects and companies and opportunities really grew before the pandemic and kind of into this slowdown that we find ourselves in. So what do you kind of do in terms of strategy now? From Space Capital's standpoint, are you kind of staying on the sidelines, seeing how the investments that you've already put in pan out, or are you still kind of aggressive in looking for opportunities out there?
Not at all. We are continuing to be active. We've been active throughout this entire period. Last year was a massive year for venture capital investing in general, and the space economy benefited from that. We saw a lot of investment into infrastructure companies, so launch and emerging industries like space stations and logistics and lunar transportation, for example. A lot of investors coming in investing in this category for the first time in these really deep tech, you know, long-term markets. We're really focused a lot on the data that's coming off of space-based assets. So the satellites industry is really where we spend a lot of our time. And these are companies that are providing critical data. Actually, in Q2, we saw the NRO, one of the U.S. intelligence, you know, Big Five intelligence agencies, make their largest ever purchase for satellite imagery from our portfolio companies and others. And we're seeing across our portfolio, our companies are seeing an increase in demand for their products and services and their data as the world becomes more dynamic and uncertain. I mean, governments and enterprises want more information, not less, in this type of market.
In terms of where the funding is flowing to, I mean, we keep hearing, at least in the private sector, or private companies, I should say, a lot of that is an early stage. And yet, I'm looking through the data that you put out. I mean, SpaceX is kind of an outlier, and they are a later stage company, right?
Yeah, that's certainly true. I mean, so we think that these data businesses that I mentioned are going to have a much easier time throughout this downturn raising capital. They're generating revenue that's increasing. In the launch side and in these emerging industries, we're seeing that are more capital intensive, like launch and like some of these others, they're going to have a harder time raising in this market for sure. SpaceX has continued to defy macro market conditions, raised a large round, almost $2 billion at an increasing valuation. And for us, we were watching that very closely because it was, we've heard some of these companies struggling to raise. We wanted to see how SpaceX fared, and turns out, you know, they were able to raise at will, seemingly.
So for the companies that maybe are having a more difficult time, is there a scenario where you could see a lot of M&A where those companies that are in a good cash position do have the capital to be able to take on assets during this time, actually go in and kind of consolidate?
Yeah, and we always look at that as a bit of downside protection for us. So we've been operating in space for decades. It's only recently become a category for investment in the last 10 years. Right. So we have large publicly traded incumbents that are being disrupted, and they have cash. So yeah, I mean, from our perspective, we look at some of these companies and say, you know, there's a huge market opportunity. Let's back the right team and see if they're able to carve off a piece of the existing market and grow the market. And if not, if they're developing some interesting IP and technology, then they're certainly willing buyers.
Really quickly, we saw a lot of these space names, Virgin Galactic, one of them, get in on the public markets through SPACs. Is that kind of over, or you think that some companies could still try to go through that?
So we have a pretty disciplined investment strategy that we've executed throughout this market mania. We didn't really get caught up in these SPACs. They have, not performed very well. There's been a couple of them.
I can see you trying to parse your words, try to be.
Here. We didn't get involved in the SPACs. I don't think that there's going to be many more of these. We might see a couple just because, there's a lot of cash sitting on the sidelines that needs to be deployed, and we're reaching the end of their timelines. So we might see a couple more, but I don't think that this is going to continue.
Yeah, it does seem like a natural fit, though. Space SPAC, right? It's only a few letters away from each other. But Space Capital Managing Partner, Chad Anderson. Thanks so much for stopping by in person, by the way. Great to have you.
Nice to be here. Thank you.